Hi friends, in this video we are going to see the deductions which are allowed for different types of investments or major expenditure that an employee is spending for getting the deduction from taxable salary income. Let's see what are all the benefits available to salaried employees. Investments under section 80C. There are certain investments like LIC, PPF. We are going to see in the coming slides. National Pension Scheme is one more investment. Mediclaim insurance premium, which we are paying for protecting the health insurance for self and family. Personal disability, in case if an employee is physically challenged, there is a specific benefit available. Likewise, in case if the dependent of employee is physically challenged, for maintenance of dependents, benefit is available. In case if an employee spends towards the treatment of specified diseases for dependents, benefit is available. In case of interest on educational loan paid, the benefit can be claimed. In case of donations made to Prime Minister or Chief Minister Relief Fund, that can be claimed. Let's see all the investments in detail. First comes 80C. What is the overall limit for this section? Overall limit for this section is 1.5 lakhs. The deduction is allowed for the investments made in different types of deposits or insurance premiums, PPF, NSE, ULIP, ELSS, like that. Let's see all the investments with their criteria and conditions in detail. Life insurance premium. Whatever premium that an employee pays for the life insurance for the term policy can be claimed as benefit under this section. For this purpose, life insurance can be taken in the name of self, spouse and children. Insurance premium paid for parents cannot be claimed under this section. Public Provident Fund, which can be taken in the name of self, spouse and children, can be taken from post offices or banks. Next, Employees Provident Fund or Voluntary Provident Fund. This is a normal deduction that an employer does from the salary. Whatever PF amount is deducted from salary will be considered automatically by employer. Next comes the tax saving deposits, term deposits with banks or post office. It should be in the name of employee only. For spouse and children, it is not allowed. NSC, National Savings Certificate, which can be taken from post office, that should also be in the name of self, that is employee. Unit linked insurance policy, ULIP, that should also be in the name of employee only. Next comes equity linked savings scheme, that is also in the name of employee. All these are for the purpose of claiming the benefit under section 80C only. Mutual fund, very important point to be considered here is the mutual fund for which SIP is being paid or one-time investment done by employee. It should be a tax saver fund. So before investing in mutual fund, if you are willing to claim mutual fund for the benefit under section 80C, you should ensure that the mutual fund is a tax saver fund. In most of the funds, the name itself will say tax shield or tax saver, like that. You can check before investing if you are keen to claim for the benefit of income tax. Next, whatever fees that we are paying for child tuition fee through school, that can be claimed. But any payment which is paid as capitation fee or development fee is not allowed under this benefit. Housing loan repayment. In case of housing loan taken for the purpose of construction or purchase of house property, whatever principal repayment that we are making, that can be claimed as part of ATC. Sukanya Samriddhi scheme. This is one of the deposit which can be taken through post office or banks. It should be in the name of daughter because the scheme itself is meant for girl children. So it should be in the name of daughter. Pension fund. It is also, this is different pension fund which is part of ATC only. It should be in the name of employee only. All these benefits are part of ATC. Next comes NPS, National Pension Scheme. There are two types of NPS which can be considered for deduction from salary. One is NPS through employer. How the PF is getting deducted from salary and being invested in provident fund account. Some employers, they deduct NPS from salary and they deposit in PRAN account. There is specific account for the purpose of NPS. They will deposit. The maximum limit is 10% of basic salary. This is being deducted from salary and deposited by employer itself. So they automatically consider this benefit under section 80 CCD 2, subsection 2. Another one is voluntary contribution. This contribution can be up to 50,000 for the purpose of Income Tax Act. You can voluntarily make the contribution over and above the employer contribution. That can be claimed up to 50,000. This is in addition to 1.5 lakh which we have seen in section 80C. Next comes 80D, which is the premium paid for health insurance. Health insurance premium are in two parts. One is for self, spouse and children. Another one is for parents. For self, spouse and children, the maximum limit is 25,000. For senior citizens, it is up to 50,000. For example, if employee he himself is a senior citizen, the benefit can be up to 50,000. Otherwise, for the premium paid for covering self, spouse and children, the maximum limit is 25,000. In case if the parents are covered and they are senior citizens, then the benefit is 50,000. So, if a person has paid the premium for self and also for parents, maximum he can claim up to 75,000 provided the parents are senior citizens. In case if parents are not senior citizens, then 25,000 plus 25,000, 50,000 is allowed. In case if employee he himself is a senior citizen and he is paying for parents who are senior citizen, maximum limit is 50,000 for self, spouse and children and 50,000 for parents, totally 1 lakh. Under this section, 5,000 is allowed for preventive health checkup. So, any kind of lab bills cannot be allowed under this section. Only for preventive health checkup, in case if an employee has spent maximum allowed expense under this section is 5,000 and this is part of the maximum allowed exemption of 75,000 or 50,000 or 1 lakh we have seen now. For both self, spouse, children and parent. Next is deduction under section 80D, which is allowed for maintaining the physically challenged dependents. In case if the disability is more than 40% but it's not severe disability, the maximum allowed amount is 75,000. In case if the dependent's disability rate is more than 80% or if it is severe, up to 1.25 lakh deduction can be given based on the doctor's certificate issued. So the main condition to claim this benefit is to avail the certificate from doctor under form number 10IA. Next is deduction under section 80DDB. This is allowed for the treatment of specified critical ailments. There are certain diseases as given in this slide. There are specified diseases mentioned in the Income Tax Act. So for treatment of those listed diseases alone, in case if doctor issues certificate, then the employee can claim up to 40,000. In case if the treatment is for senior citizen, the benefit can be up to 1 lakh. Next comes section 80E. This is towards the payment of interest on educational loan. In case if an employee has availed educational loan for higher studies after completing senior secondary exam, in case if an employee has availed the educational loan, the interest paid on such loan can alone be claimed under this section and there is no limit for interest. Principal repayment cannot be claimed under this section. This is allowed for educational loan taken for self, spouse and children. This deduction is available for a maximum of 8 years or till the interest is paid. These are all deductions available for interest on deposits, 80TTA and 80TTB. 80TTA is allowed up to 10,000 in case of interest on savings account only, not for the fixed deposits. Whereas 80TTB is allowed for interest on deposits. There is no specific mention as savings deposit, so it is allowed for all the deposits interest, but it is allowed only for senior citizens. 80DTA cannot be claimed in case if the employee files the income tax return beyond the due date. 80U, this deduction is allowed for employee who himself is physically challenged, and again employee has to obtain doctor certificate. In case of severe disability, 1.25 lakhs is allowed, or in case of disability above 40% but not severe disability, employee can claim up to 75,000. So these are the deductions which are available for expenditure that an employee spends or the investments made by employee. Thank you.